We have a panel. They're a great panel. Let's meet them. First of all, we have Dr. Siegfried Utzig. Hello, Siegfried. How are you? We have you on mute at the moment. There we go.
Yes, hello. Fine. I'm fine. Thank you very much.
Where do we find you today? Where are you?
Oh, I'm sitting in Berlin, and well, I'm very eager, and it's the time being to be present at a situation in London. That's very fine. Yeah.
It's great to see you here with us, even though we are separated by distance. But Siegfried is a director in economics at the Association of German Banks. Great to have you with us from Berlin today. Dotun Rominiyi. Hello, Dotun.
Hi, Lindley. How are you?
Great. Yeah, good. Thank you. Where do we find you today?
So currently in London, southeast. So
excellent. My old patch. Dotun works in blockchain strategy and emerging technology at the London Stock Exchange Group. Great to have you here from Southeast London. Ben Dyson. Hello, Ben. Great to have you there. Ben manages the digital currencies team at the Bank of England. Great to have you here. Janis Legler. Hello, Janis.
Hi, Lindley. How are you?
Very good. And where are you today?
Also in Germany.
Also in Germany, neighbors across the screens. Janis is Chief Product Officer at Mode. Great to have you here. And last but not least, we have Chris Aruliah. Hello, Chris.
Hi, Lindley.
Great to have you here. Chris is Head of Banking Relations at Bitstamp. Wonderful to have you all here. It's going to be a great discussion and very, very timely. As ever, you may have your own questions and comments to put to our panel. You are the last person in our panel, and then you become the first person in our panel. You can submit your questions on the right-hand side of us in the Q&A feed. And also, please join us live on video. All you need is a microphone, a camera, and Zoom. Let us know if you'd like to join us live by adding the word Zoom with your submitted written question. And we would love to see you here to add you to our happy panel at the end. Okay, let's start and look at the state of play, where it all began with Bitcoin. First of all, Dotun, is there still room for Bitcoin in a modern crypto conversation, do you think?
Yeah, so I would say that Bitcoin is very much leading the conversation when we talk about kind of cryptocurrencies. I mean, it is by far, the largest traded asset amongst that asset class. There's still a great deal of kind of adoption on the retail side. I think it's maybe deviated from the kind of initial conceit of how it was conceived to be a kind of a method of payment, in that its volatility has kind of stifled that, but you're still seeing a lot of adoption across the board. I mean, there are still challenges with the technology underpinning Bitcoin, so the lack of scalability, obviously power consumption. I believe Bitcoin's basically consuming more kilowatt hours than Switzerland at the moment. 62 kilowatt hours, as I understand. But yeah, I mean, certainly when we look at the institutional space, there's a lot of growth and adoption on cash settled securities, but also kind of derivatives of the assets, and then just interest from firms looking to trade the underlying. So,
can I throw that around a bit? I would like to hear from maybe from Janis, if I could throw it to you. What do you think about Bitcoin? I mean, Bitcoin, yes, was the kind of foundation for all this conversation, but actually, as Dotun says, it's right there. It's still at the top. It's still something that's very much a going concern.
Well, I can only agree with this. So the Bitcoin dominance has only increased over the last years, and we, for example, at Mode, we only offer Bitcoin as a sole cryptocurrency on the platform, and we've seen, like a very sharp decrease in volumes, in demand for it over the last month. So I can only agree with that.
Just staying with Germany for a second, Siegfried, what do you think about that? Is that something you agree with? Are there any differences in opinion here in terms of the role of Bitcoin or the prominence of it?
Well, we see perhaps Bitcoin everywhere, but except in money. So that is, I think, for us as the banking industry, it's the problem with this. We see the technology, we see the big force of this, and the importance of the technology behind it, which can be used for different features in the banking industry, in securities, and also in money. We see the discussion on stablecoins, on CBDC, but there is the technology, but there is not Bitcoin in it, and therefore it's more for us. It's more a niche, and there are strengths in it, but not in the field of money, of payment. In some niches, but most of the banking industry doesn't want to have to do very much with the niches Bitcoin is used.
Mm. Yeah, it's a complex picture. We'll come to Chris in a second with talking about customer journeys, but before that, Ben, let's look at another going concern, Facebook's Libra. What can we learn from how that's evolved?
Yeah, so I think Libra highlighted a couple of places where the current financial system is not really serving people particularly well. And I think that's particularly in cross-border payments, especially if you're looking at remittances, so people sending money home to their families, and also in the very high number of people, particularly in developing countries, who don't have access to bank accounts or any kind of means of electronic payment. Now, those are not easy problems to solve. And, it may be that one solution is to get everybody to use the same ledger or the same technology system to make it very easy to make a payment from A to B. But people want to get paid in the currency they use locally. They want to receive the currency that they're going to use locally. So you can't just look at that single transaction across, for example, the Libra blockchain and say that you've eliminated all the costs and all the frictions in cross-border payments. Yeah. It's a complex problem to solve.
It's something that's come up a lot in our conference. Lots of talk about, cross-border payments. Chris, I mean, look, as Ben says, it's not easy to be a customer sometimes if you want to send money to another country. How can banks improve customer journeys around crypto assets, do you think?
Well, I think, Lindley, as we've been hearing yesterday and today, we're in an era of open banking. And that era with open APIs allows us to create much better joined up experiences. And, just in the same way as, a company like Bitstamp can offer open banking payments from within our app, banks can also connect to APIs that are out there in the ecosystem that allow their customers to, to buy and sell digital assets. If I can use a couple of examples, we're gonna hear from Mark from Ziegler after this, which is a great example. But Revolut, which is mentioned yesterday as well, another example of a bank where, not only can I do my banking, but within the wealth section of the Revolut app, who we partner with, I can buy and sell equities. I can also buy and sell digital assets. So, that's a good example of how banks could, improve that journey for customers.
Yeah. Does everyone agree with that? Again, back to Janis, if you don't mind me asking you, that sounds like it is true. It just needs to be made easier. It needs to be at your fingertips. It needs to be, in some ways, I guess, for the people who want it, treated like any other transaction.
Definitely. So this is something that we are also trying to advocate. So in order for the industry to grow, UX definitely needs to, improve. We could even think about it this way. Customers in the end don't even need to understand blockchain technology per se. It needs to be made so easy that it's kind of running in the background, and an average user who does not have or want to spend a lot of time getting acquainted with the technology behind it can still get access and exposure to Bitcoin, for example.
Yeah. And Dotun, back to you on that one. I mean, that sounds totally sensible, I guess, but there are sticking points, and there are still outside the industry concerns about cryptocurrencies, clearly. So, it needs to be regulated. It needs to be available, but also, reliable, I guess, doesn't it? Dotun, yeah.
Sorry, absolutely. We've absolutely seen, a broad suite of interest and analysis by kind of regulators across the UK and Europe around cryptocurrencies specifically. If we look at, the fifth anti-money laundering directive specifically, looking to tackle some of those concerns. But I think just more broadly, I think there's been a lot of learnings that have really encouraged a lot of interest in the underlying technology and how it could be applied to, let's say, for example, central bank currencies, which are centrally issued and therefore have, a different level of trust underpinning them in terms of their ability to maintain financial stability, as opposed to potentially undermine it, where some of the more private offerings may. So.
Yeah, I won't throw that to Ben. That's an unfair load to dump on your shoulders for that answer. But Siegfried, over the last year, we've seen a lot of conversations about CBDCs. Are they? Do you think more stable solutions?
Well, when we talk about money, which we did during the last minutes, the most important word is, of course, trust. Without trust in a central bank, there is no stable money. That is, I think, that we know very much from history. And in this sense, an independent central bank committed to monetary stability is a pretty good starting point for a new programmable form of money, and you may call it CBDC. And that's, I think, but we have still a long way to go. We just started the analysis of CBDC, and we do not really know at the moment. Do we need it in our daily life? We do not use central bank money. We do not use cash. We do use our deposits. We do use scriptural money. And if we now are talking about CBDC, this would mean, are we really thinking that there will be an increase or a necessity for a larger part of the usage of central bank money? Or will there be solutions from the banking industry, from big techs or other companies who will be able to provide monetary solutions in the crypto base on the basis?
I suppose nobody will know whether they work, whether there's an appetite for them until they're released to the world, and that's the difficult thing, taking that really big step, isn't it?
Yes, of course, it is a big step. It is a big changer in the field of the monetary order of the world, and therefore we have to be very careful. Introducing such a big thing has to think about not to destroy the efficient monetary system which is financing our economy today. It has to fit into the existing system. We cannot destroy the old one and not knowing what the new one will be about. And therefore, I think all the central banks in Europe and around the world, and also the Bank of International Settlement and all these institutions are thinking very deeply on about these topics.
As we have done throughout our days together, we'll talk about COVID-19 in just a second with Janis. But actually, on this, related to this issue, Ben, how big a role do you think digital currencies will play in eradicating cash? And in some ways, we have to relate it to the potential of CBDCs. That is not happening right now, clearly, as we've just heard from Siegfried. But what importance do digital currencies do you think have?
Yeah, so I think first thing to say is the way we see it, we see central bank digital currency as a complement rather than a replacement for cash. And we have said as the Bank of England that as long as people want to use cash, we'll make sure that cash is available. But what we are looking at is, there is a trend of declining use of cash that may have accelerated over the last few months. It's too early to say what the long-term result will be. But we know that there are some people that are dependent on cash, and they would be disadvantaged if cash essentially falls out of use. So what we're looking at is how a central bank digital currency can provide some of those useful functions. So, for example, privacy in payments, and also the kind of resilience or backup feature that you get from cash. So if existing payment systems go down, it's very useful to be able to revert back to cash payments. So we don't see it as something that's going to accelerate the decline of cash, but it may be able to fill some of that gap if cash does fall out of use.
Yeah, and it wouldn't be a straight swap. I mean, there's no way that could happen, really, I guess. So, it's not as if it does replace the other. Janis, let's talk about COVID-19 for a second. Where do you think crypto markets have felt the greatest effects from the pandemic? And will it last?
Well, an immediate effect was definitely the sharp price decrease in crypto markets in February, right? But this happened in all other asset classes. In fact, we could really observe a global flight to safety from all major asset classes into fiat currencies, mainly US dollar, because they are still perceived as the more secure choice by most investors, right?
Yeah.
This was also amplified by a high percentage of leveraged positions that were forced into liquidations and so on. So this initially went against the very narrative of Bitcoin as a safe haven asset. But crypto markets have recovered quite fast, actually, and it's important to note that the fundamentals of Bitcoin, for example, did not change. At the very foundation, it has a strict monetary policy, right, which implies scarcity. And if we go back to the points Siegfried pointed out, there are some savers that are, for example, concerned about, unprecedented policies from central banks about quantitative easing. So independent stores of value are definitely in demand. This could be gold or Bitcoin, which is referred to as the digital gold often, right? They're becoming interesting to investors, and you also have mainstream investors speaking about it, like Paul Tudor Jones, and they're endorsing it. And you can definitely we observed that a lot of new entrants to the market since February, March, that want to get exposure and hedge against, for example, inflation. And that's for example, our trading volumes have been picking up since February, and this is throughout all demographics. That's important to mention. I think we've published a research report on this today. It shows that boomers and Gen X have both been doubling their investments in Bitcoin every month since then.
Chris, can I throw it to you? What do you think in terms of the will this increase that Janis has been talking about? Do you think that could continue? Do you think this is the start of something special?
Well, we've definitely also seen an increase, and yeah, I mean, I think the trend towards this asset class is increasing, both on the retail and on the institutional side. Some of the points we touched on there, in terms of some markets, for example, South Africa, we've seen a huge uptick in demand where people are looking to move out of the local currency and put it into Bitcoin, quite frankly, as a safe haven. So yeah, certainly from the data that we see, no slowdown at the moment.
Can I ask just a simple question from the outside world, from an investor's perspective, how abstract do I need to think of digital currencies as being? Dotun, is this as abstract as it would seem to an outsider, or actually is this something that is stable and forward-looking enough that can be considered on a par with other currencies?
I would say that even though I suppose the definitions of many of these cryptocurrencies are in many ways abstract, I think when you look at kind of the market dynamics and the kind of broader adoption and utility of how these things are handled, many of them reflect commodities in some form. Actually, most of them reflect penny stocks. But I think it's difficult to really put them against currencies, tangible currencies, right? For many of the reasons expressed already. I mean, one of the largest challenges is the volatility, specifically. And so, whilst it may be beneficial when you're based in a jurisdiction where, there is, there are some relatively severe economic challenges in the short term to maybe perhaps put your money in Bitcoin, as a bit of a hedge, but in maybe more stable economies like the UK and the US or parts of Europe, that may not necessarily be the case.
Yeah, it's one of those elephants in the room sometimes, isn't it? That we should talk about, even though it's a difficult one to answer. Thanks very much, Dotun, for answering that one. Okay, let's look to the future for a second, and we'll talk about CBDCs a bit more. Let's think about how banks can get prepared for the future rollout of CBDCs. And yes, we don't know the exact shape of that yet. But Siegfried, what challenges do you think banks face in terms of infrastructure and storage solutions?
Well, that's very difficult at the moment to talk with banks how they should prepare for something they do not know what it will look like. That's very, very difficult. Today, banks are at the heart of the payment system, and they want to continue to perform this function with CBDC or with stablecoins or whatsoever in the future. That's for sure. But this will only be possible in our opinion, if central banks do not issue CBDC by themselves, but do so through the banks. And this is, I think, one of the important positions we as German banking industry have in this field. And just as banks today offer their customers services around their banking accounts, they will also do so for digital wallets in the future. I think that's the situation we are discussing at the moment.
Yeah.
And it's not possible to be more specific at the moment.
Yeah.
But banks want to be part of the system, and so they are ready to do so.
Anyone else have any thoughts on that one? Because it's it needs. You can only prepare so much when the future is yet to be discovered, right? So maybe I'll throw it to Ben. What role do you think central banks do play in the further rollout of CBDCs? Clearly, somebody has to take charge. Is it you?
Yeah, well, we haven't made a decision yet that this is something that we definitely want to do. We're looking for what the benefits would be, what benefits it would bring to the payment system, particularly. What we have said is that we wouldn't adopt a model where we have to do everything. So you wouldn't be calling the Bank of England to reset your password, for example. There's a huge role here for the private sector, and it may be that banks want to provide some of these services, but it could also be other payment service providers and challengers to that. So we're looking at this as a kind of a platform that allows further innovation and competition within payment services rather than us doing everything. Right?
Can I just ask maybe Dotun and maybe Janis as well? Dotun, please. Yeah, I mean, it's almost like, what support do you need? What decisions do the banks need in order to make this go further? Dotun, please.
Sure. Perhaps maybe to bring a slightly different spin on the question. I mean, so we have done a lot of analysis on a lot of the more recent literature that's come out around CBDCs, and I think whilst there is a very strong case for CBDCs in the retail space, there's also similarly and alternatively a fairly strong case for CBDC in the context of wholesale financial markets. And so with a lot of the work that we're doing specifically around digital securities, when you look at the kind of domain of post-trade settlements, where you have delivery versus payments of cash, there are actually a lot of efficiencies that can be gained when you're leveraging essentially a fully natively digital version of cash, like a CBDC, that actually has the backing of that currency by a central bank, essentially. So there's a lot of exploration there, a lot of opportunity there that is in many ways actually quite different. So a CBDC could solve for that, or it could solve for the retail side, or it could solve for both.
Yeah. Chris, what other industry trends do you think are affecting the rollout of stablecoins and CBDCs? Is there anything else that could also drive the rollout of these things?
Yeah, I mean, just picking up on the points that Ben and Dotun made, I mean, it's demand, I think. It's demand for these new systems. So if we look at, stablecoins, CBDCs, as we just talked about, that they can undoubtedly bring huge benefits. And if we look at the area of cross-border payments, that's really where people are looking at, utilizing stablecoins. But arguably, on the flip side, those systems are already emerging, and there are systems out there where we can do this. If I just sort of pick an example from our business, we're about to launch with our UK bank partner, BCB Group, a real-time payments and settlements system, which is built on R3. And that doesn't utilize stablecoins or CBDCs, but it gives us the benefits of, what stablecoins are looking to achieve. So I think, with the emergence of alternative systems like this from new vendors or new players, it drives the interest and, the use cases around stablecoins for banks and central banks.
Janis, would you agree with that? I mean, it does take, until there's something really more stable to adopt, to buy, you wouldn't really invest, would you?
Well, we hear this a lot, definitely, and we are following the stablecoin trend very closely. So these are not privately issued stablecoins, but stablecoins that are running on permissionless blockchains, and these are very interesting for us. There's a lot of very innovative products around them, and we also intend to offer products around this particular field. However, here we still need more security for investors around this. We need regulation around this to provide more security and more comfort also for investors, right? But we definitely see the benefits, and as Chris has pointed out, for example, for international settlements, for remittances, and all these areas.
Yeah.
So we also have exciting plans here, and it's a very interesting space.
Very good. I don't want to use a metaphor too far, but it sounds a bit like passing the buck. But Dotun, what about governments? You know, what role do they have to play?
I mean, naturally, governments and regulation are very closely tied together. I think, you know, when we look at some of the benefits that the digitization of cash or the digitization of currencies can provide, just in terms of kind of transparency of payments across the board. And whilst, you know, DLT can facilitate privacy, not every solution that may or could be conceived of being deployed may seek to do that. And so I think, you know, the government needs to be somewhat vigilant in ensuring that, you know, the kind of inherent privacies that we see in the models of cash that we have today, whether that be, you know, commercial bank money in, you know, in account-based systems or just physical cash, is in many ways preserved. But then at the same time, that the relevant mechanisms to ensure that, you know, money laundering is, you know, the risk of money laundering is mitigated, the risk of terrorism financing is mitigated, and similar. So.
Yeah, those would be the things, wouldn't they be, that that many people would jump to, because you know, who else will actually be able to step in and look at regulation for those things and investigate those things. Janis, back to you. What about digital identities? We talked about it quite a lot today in our other sessions. You know, we talked about blockchain obviously as well. So where do these need to go now in terms of security, in terms of being able to reliably know who's buying and who's selling?
Well, a point that has often been criticized really about Bitcoin is the alleged anonymity, right? But at Mode, for example, we're in the process of becoming a regulated business, and therefore we KYC every customer of ours, whether they deal with crypto or fiat. And I think this will become a standard for the wider adoption of digital assets, definitely. It's also a requirement for the space to mature, right? The trick is to do it seamlessly. So we've seen this throughout most challenger banks here you know, throughout this event. They do that seamlessly, and also the crypto space should follow here and pick up the pace. And another point here is the anonymity of Bitcoin. This I call it the pseudo anonymity, because despite the common perception, the Bitcoin addresses are not, blockchain addresses are not associated with a name per se, and therefore anonymous. But there are very sophisticated tools you can use to trace back the actual origin of assets that are deposited onto your platform, the likes of Chainalysis, Elliptic, and so on. And here you can really, with a high degree of certainty, assess whether the asset is coming from an illicit activity, dark markets, or in fact from a regulated exchange. So this is a very interesting point. And I think there's already a fair amount of identity standards among the top tier digital asset providers, and it's also very much needed for the space to grow.
Ben, that sounds really rigorous. I suppose, you know, the entire industry and industries need to be on side for this, so that that all of these currencies can be released safely. And from your point of view, Ben, I guess that's just essential. You know, unless everyone is being rigorous in the KYC, then there's no go, is it?
Yeah, there's been a lot of work to keep existing payment systems safe and secure, and you need to have a similar kind of standard with any kind of new technology. And there's something we think a lot about with central bank digital currencies, but it applies equally to things like stablecoins and some of these more innovative products. So they have to be as safe as what we're using today.
Yeah. Very good. Well, what a discussion. I've certainly learned a lot. Great so far, but now it's time to turn over the floor to you at home. We'll cover as many of your questions as we possibly can for the next just under 10 minutes. Okay, questions here. I haven't seen them, so let's, and the audience and the panel hasn't seen them, so let's see what we can do. Okay. Looking into the future, there may be demand for fractional share ownership or owning tokenized shares. Is LSE planning to tokenize assets in the near to mid-term? Our LSE speaker, what do you think?
No comments. No, I mean, we see a lot of interest in tokenization. That, you know, there's clearly quite a number of organizations out there that are providing services for tokenizing securities, equities, bonds. You know, we are engaged with a lot of these companies. I think a lot of what we see right now is that the biggest challenge is around providing secondary markets and enabling secondary markets for these assets. And a lot of that falls under just the current regulatory regimes, which need to be upheld. So there's a lot of work going on. We're doing work in that area to try and solve for some of those challenges. And I think over, let's say, the longer term time horizon, you'll start to see some movement.
It's so unfair of me to ask that to you, Dotun, but I didn't promise that I wouldn't, and I didn't know the question. So there we go. Any other thoughts, Siegfried? Any thoughts on tokenization and that sort of thing, and just the fractional ownership?
Well, we at the Banking Association and our banks, we are thinking about it, and I think in Germany we have already some legislation on tokenization, and of course there is a future development which goes in this direction, but I'm not the expert on this field, so I have to apologize.
No,
at this point, so I cannot go in the deep discussion here.
This is the joy of live. We don't know what's coming, and we answer it the best we can. And I'm not going to be unfair by throwing it to Ben as well immediately. Let's have a look. There is a question to Ben here, though. If you don't mind, Ben, let's have a see what this says. And again, you have first refusal. If you can't answer it, we don't answer it. Ben. The main fear of CBDCs is that they may be seen as mass surveillance tools if designed in a private fashion. What are your thoughts? Is that even possible to answer?
Well, I think the privacy question is really important. So some people talk about the privacy that you get with using cash, and can you replicate that with a central bank digital currency? Obviously, anything that we build would have to be compliant with existing regulations on money laundering and financial crime. But we this is not intended to be some kind of surveillance tool. That you have to have privacy built in to the system. Yeah,
that is, and that of course has been previously an attraction of some digital currencies in that that privacy was paramount. So it is going to be I guess a delicate balance for organizations involved, but that's great. Okay, hope that was helpful to you, whoever wrote that question to us. Thanks very much for that. Okay, what else do we have? We have right, what added value would a private blockchain provide over traditional systems? A public blockchain is not superior in terms of transparency. Now, I don't know who wants to answer. Maybe give a go at that. I mean, Chris, I fancy throwing it at you for some reason. I'm not sure why I want to do that. But Chris, look, I mean, we talked with Roger in the last session about the difference between private and public blockchains and the attractions of each. But what do you think? This person believes that public blockchains are going to be superior time after time because they have the entire chain.
Yeah, I mean, I think again it goes back to use cases and what are we using that blockchain for. So I think there's in the public blockchain scenario with Bitcoin, it has a certain use in that space and is widely used. Private blockchains for other use cases, we may not want our data shared publicly. To Janis's point, there's huge benefits actually for exchanges like us being able to trace assets from a KYC and AML perspective. So having that, public blockchain is very useful, but that's not necessarily the case for other use cases. So it's dependent on the use case, I think, Linley.
Yeah. Question here: are customers going to expect digital currency capabilities from their banks? Janis, can I throw it to you? What do you think about that? And it's one that I can throw around to Ben and to Siegfried as well, maybe. But Janis, what do you think, almost from that customer perspective? Do you think customers will expect this sooner or later?
I definitely think so. So I think banks have, maybe reacted too slowly to this, and this is why crypto exchanges have seen a huge uptick in customer numbers for over the last years, and they are providing more and more banking services. So I think more average users are requesting it from their banks. They want to get exposure. We've seen the paper from the FCA, and it's only becoming more. So I think definitely, and if the banks don't do it, there are a lot of other providers, payments providers, cryptocurrency exchanges, and so on that will gladly provide the services, right?
Just briefly, Ben, that is the situation, isn't it? And I guess, does that influence you?
I think it's what we're doing is we're looking at how money is evolving, and to a sense we have to keep up with that. So if what people need from the kind of money they use changes, then it's right for central banks to be thinking about whether it's time to change the form of money that we provide.
Yeah, actually, I won't throw it to Siegfried. I want to throw another question your way. It's an interesting one, actually. This one from Paul Rogers. Thanks, Paul, for writing this into us. Should traditional banks try to respond to the emergence of single-use digital currencies designed for specific use cases, including V-Bucks in Fortnite? So, in the gaming industry, of course, these credits are really interesting. Is that something that you would ever consider?
I mean, I think.
Oh, Ben first, and then Siegfried. Absolutely, Ben, please, briefly. Yeah.
Sorry, I misheard you. I mean, I think the thing is the more widely that you can use a form of money, the more useful it is. So single-use currencies they have a limited use. I'm not sure that that's necessarily the way forward.
Yeah. Siegfried, again, we're talking tokens, really, in some ways, aren't we?
Yeah, well, I think that's the most interesting question also for us. We have just published a position paper with from the Association of German Banks, where we discuss all these features of CBDC, of stablecoins, and so on. And we of course ask the question, what can banks do? And we know from some of our banks that they are able to create token based on their own scriptural money. And this kind of money is of course not a solution. We think that the banking system as a whole has to bring a solution where the system of scriptural money has to be transferred to the token world. And the problem is the interoperability between these tokens, because the settlement is quite different in the token world than in the in our bank account world, and this problem has to be solved. And this is the topic where we have to find solutions, and where the banks are interested in and want to find solutions to be part of the token-based money in the future.